You are having trouble paying your credit card debt. You might be hopeful that your credit card issuer will forgive debt you are unable to pay. Credit card debt forgiveness is rare, but you may be able to reduce your credit card debt in other ways. Make sure you understand your options and how they could affect you in the near and the long term. Here's what you should know about lowering or even eliminating your credit card debt. Credit card issuer rarely forgive the debt. So when you open your credit card account, you agree to the issuer's terms and conditions, which includes your promise to repay debt unless unless there unless there is a com- compelling reason why you should not be responsible for your debt. In case of fraud or identity theft, or for instance, there's little chance that your issuer will let you off the hook for your balance. How to negative negotiate your credit card debt. While you may not be able to have your credit card debt forgiven, there are some steps you can do to make it more manageable, like work directly with the credit card issuer, or if you are financially affected by natural disaster or declared emergency, or are experiencing general financial hardship, you should quickly let your creditors know what's going on, even if you have not yet missed a payment. When making contact with your credit card company customer service team, Consumer Financial Protection Bureau suggests that be prepared to provide information including why you cannot make the minimum payment, how much you can afford to pay, when you should be able to restart your normal payments, the new payment amount that would work for you, and for how long. This information may help your issuer work out a more feasible payment plan based on your circumstances. For instance, you may be able to negotiate different options like a credit card hardship plan, which can provide some financial relief while you get back on your feet. Some options with the credit card hardship program could include negotiating a lower interest rate or minimum payment, or even waiving late fees. In some cases, you may be able to pause payments without late fees as well. If you are concerned about your credit score, while temporary relief from your payments is welcome, your credit score could suffer if the arrangement lowers your credit limit and close your account. A lower credit limit or closed account can can cause your credit utilization rate to jump, especially if you have high debt on other cards. Credit utilization is one of the most important factors in your score, so preserving your credit limits could help you protect it. Finally, you should know that your card issuer is not obligated to accommodate your request for forbearance. Although some credit card companies have been accommodating these requests in recent years due to the pandemic and related recession, there is no guarantee that you will have this option. DMP, Debt Management Plan. You may be able to set up an arrangement known as DMP, Debt Management Plan, offered by credit counseling organizations. These plans may succeed in getting getting your uh, creditors to waive fees and lower the interest rate in your accounts. So Debt Management Plan (DMP). You may be able to set up an arrangement known as DMP, Debt Management Plan, offered by credit counseling organizations. These plans may succeed in getting your creditors to waive fees or lower interest rate on your accounts. If you agree to fully repay the debt over time as part of your DMP credit counselor, you are with will collect working with and will collect a single monthly payment and distribute it to your creditors. Plans are typically structured so your debt are fully repaid in 3 to 5 years. Interest typically still occurs on accounts that are part of the DMP, but your issuer may offer a lower rate. Downsides to using a DMP includes DMPs don't cover installment debt such as student loan or mortgages. You will have to close the credit card that are part of DMP. You may have to stop using credit cards that are not part of the DMP while it's active. You will pay a monthly fees to credit counseling agency. Although DMP can be a great way to get back on track with your credit card payments, it comes with some consequences that may not be ideal for you. Work with debt settlement company. Debt settlement companies may be able to settle your debt for a lower amount. For example, if your card balance is 5,000, they may be able to settle it for 2,000 or 2,300. Strategy relies on assumption, and the creditor would prefer a portion of debt to be paid. It would prevent you from defaulting on the account. While it may sound like a good solution, debt settlements are typically viewed as a last resort. Before bankruptcy, it can be fraught with risk and scams, and there is no guarantee that the service you have paid for will be effective. As mentioned, credit card companies are not obligated to settle your debt. So, debt settlement can also result in damage to your card and ask to stop making payments on your debt while debt settlement company attempts to negotiate with your creditors. Instead of paying your bills, you will have to make payments towards the account and debt settlement company controls, so they can offer the balance of the account total amount you owe, because payment history is the most important factor in your credit scores. Consolidate your debt. If your credit utilization ratio is modest and your credit score has not decreased, you might be eligible for debt consolidation loan. These loans allow you to pay off your existing debt with a lower interest rate. You will pay in fixed monthly payments, and if you are homeowner, you may be able to tap the equity in your home and pay off your debt with a home equity loans or home equity line of credit. However, the hazards with this type of credit is that you risk losing your home if you are unable to pay off debt. Bankruptcy. Declare bankruptcy. Filing this Chapter 7 bankruptcy could discharge, forgive all your credit card debts. However, bankruptcy should only be considered as a last resort option due to the lasting damage it will cause to your credit. Bankruptcy will remain on your debit